The NIO EV manufacturer just revealed their detailed strategy for hitting the $1,000 mark. Which brand of electric cars comes to mind for you when you think about these vehicles? Tesla is the clear winner in this competition. To eliminate any confusion, Tesla does not put any financial resources into this particular marketing plan. You did, however, take Tesla into consideration. Why? Well, there's yet another company that's creating a name for itself in the electric vehicle sector. That's NIO EV going head-to-head with Tesla, competing with elegance, performance, and a cutting-edge marketing approach. Hey folks, welcome back to Electro Zone. In this video, we are going to find out the NIO EV makers' step-by-step plan on reaching $1,000 revealed. And let us dive in. When it comes to the production of electric vehicles, there are currently a number of new players on the market, and it can be difficult to determine which of these will be successful over the course of time. EV startups that intend to commence production in the next year or two could be particularly dangerous investments. This is due to the fact that there will be a significant number of providers of electric vehicles by the time these companies join the market. Early adopters, on the other hand, could perhaps have more time to establish themselves. Impressive sales growth. NIO was established in 2014, and during the third quarter of that year, the company sold 24,439 vehicles. This equates to a growth of 100.2% when compared to the same quarter 1 year ago for the company. NIO has increased its quarterly revenue at an average growth rate of over 137% over the course of the past 2 years. Despite persistent challenges with the supply chain, NIO was able to deliver 10,628 vehicles in September, representing a year-over-year increase of 125.7%. Its yearly sales and deliveries in 2020 increased by more than double what they were in 2019. NIO does not specify a long-term predicted growth objective, but the company should be in a solid position 5 years from now, even if the growth rate slows down a bit compared to its past levels. The sales of the company are forecast to increase to $13.6 billion in 2024, up from $2.3 billion in 2020, according to analysts on Wall Street. Demand for electric vehicles is strong across the country and the world. It's anticipated that the market for electric vehicles will experience a significant rise over the next few years. There are a number of variables that are contributing to the expansion of the market for electric vehicles. Some of these factors include supportive government regulations, declining costs associated with the production of EVs, enhanced performance, and the development of charging infrastructure. And while demand for electric vehicles is increasing all across the world, China is now leading the pack in terms of growth. According to research, the global sales of electric vehicles experienced a growth of 160% in the first half of 2021. China was responsible for the sale of 1.1 million of the world's 2.6 million electric vehicles during the first half of the year. Sales of brand new EVs in China in the first half came very close to matching total EV sales in the country for the entire year of 2020. In the first half of 2021, EV sales in China accounted for 42% of the total EV sales worldwide in that period. Therefore, NIO may stand to gain from the robust demand for EVs in its home market. Europe currently has the second fastest expanding market for electric vehicles after China. Throughout the first half of the year, approximately 1 million electric vehicles were sold in Europe. NIO is also interested in pursuing that market. Norway currently is in the forefront of the widespread adoption of electric vehicles, and over 80% of all new car sales in the country are comprised of EVs. In September, NIO successfully delivered its first batch for customers in Norway. The organization has long-term goals of expanding into additional markets throughout Europe. NIO is up against tough opposition. Even though NIO's revenue growth has been outstanding so far, the company faces intense competition from other companies in the industry. The market for electric vehicles in China, including hybrids, is dominated by a partnership between SAIC Motor, General Motors, and Liuzhou Wuling Motors. This partnership owns the largest percentage of the market. BYD, a significant traditional automaker that is pushing into the EV category, is another key competitor that the company must contend with. There's also some significant competition coming from a number of smaller firms such as XPeng and Li Auto. In the most recent 4 quarters, XPeng showed far greater revenue growth than NIO did, although starting from a significantly smaller basis. NIO faces strong competition from Tesla, a well-established electric vehicle manufacturer that is a leading player in China's EV market. In a nutshell, despite the fact that it is anticipated that there will be significant increase in the market for electric vehicles in the next few years, NIO's expansion will not be an easy task. a stock that shows promise. NIO has done well so far despite the presence of competition. The number of automakers who introduce electric vehicle models is expected to continue growing, which will result in increased levels of competition in this market category. On the other hand, NIO is taking a number of actions to ensure that its growth will be sustainable over the long term. For instance, the company's battery-as-a-service business model enables clients to buy a car without a battery and then subscribe for battery packs at a later time. NIO wants to increase the size of the market it can sell to in another way by creating models with lower prices targeted toward consumers who are price conscious. NIO's growth in the next 5 years and beyond should be helped along by robust demand, sound growth methods, and the company's aspirations to expand in the European market. NIO in 2021 and beyond. NIO shares reach an all-time high of $66.99 in January 2021, driven to an all-time high by strong momentum in the EV stock market, along with remarkable sales growth data. Nevertheless, NIO and other high-growth firms have recently experienced a slight return to earth, and the stock's currently trading in the neighborhood of $35. NIO investors are currently comparing the likelihood of significant long-term growth in China's market of more than 1.8 billion people due to government subsidies against the company's still sky-high market cap of $59.6 billion and a price-to-sales ratio of 24. However, those who made their purchase a year ago and remain patient have seen a significant increase in their returns on investment. If you'd invested $1,000 in NIO stock on March 29, 2020, you would have $12,400 or so worth of that investment right now. Looking into the future, market watchers anticipate that NIO stock will experience another significant price increase during the next year. The 18 analysts who follow the stock have set a price objective of $63.49 on average for it, which indicates an upside of 81.1% from where it is currently trading. Headwinds become less robust. The weak performance of NIO stock in 2021 is reflective of the several challenges that the Chinese electric car firm is facing. The first of these was a continuous problem with the supply chain for computer chips, which had a notably negative impact on delivery in the months of August and October. However, the situation should soon be under control, as chip manufacturers are anticipated to significantly increase their production capacity by the third quarter of 2022. According to William Lee, the CEO of NIO, even the absence of a single chip might have a negative impact on manufacturing, despite the fact that more than 1,000 chips are used in each vehicle. Due to issues with the supply chain, NIO was forced to temporarily shut down some of its operations in the previous year. The political tensions between Beijing and Washington, which influenced Chinese stock prices on American markets, were another factor that worked against the market. The management of NIO has stated that the company will undoubtedly comply with all laws and regulations that are in effect in the United States, but this does not preclude the prospect of the company eventually being listed on the stock exchange in Hong Kong. And that brings us to the end of our video. Feel free to let us know what you thought about it. And if you like this video, then please leave a like and subscribe to our channel for more amazing content. Thanks for watching, and we'll see you in the next one.